Well, hello everyone. Welcome to Swing Trading, or since this is a broadcast brought to you by the Charles Schwab Corporation, maybe we could call it Swing Trading. We're going to talk about, you know, swing trades using options or using stock, and which ones are better. And the answer is it depends. It depends on how much risk you want to take. It depends on the strength of the trend. It depends on a whole lot of things. So we're going to do some example trades where we're going to compare and contrast, using long calls and then using stock. So, so I think it's going to be an exciting class. I'm looking forward to it. I have Kevin Horner with us in the chat. I'm filling in today for Mike Fairborn. If you are not following us all in the land of X, you are missing out, my friends. So I encourage you to do so. Kevin Horner's handle is at Kevin Horner CS. My handle at Barb Armstrong CS, and Mike, who is enjoying a well-deserved day off, his handle is at Mike Fairborn CS. So just before we get into the swing of things, know that everything that we cover here is for general information purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. When we look at our long call options, know that options carry a high level of risk and aren't suitable for all investors. In fact, with a long option, how much are we risking? The entire amount we pay to get into the trade. And so, we need to take that into account. We are using the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn and hone your skills. It looks like, smells like, feels like real money, but it's not. And so, you can practice, how to place trades on the platform and also become familiar with your trading plan or your strategy. Today, we're going to talk about a swing trading plan, given that this is the swing trading class. Okay. So let's get out and go to the platform. Now, I used to, in these classes, spend a little more time doing a market overview, but Kevin Horner, most days, Monday, Wednesday, Thursday, and Friday, does a great overview at the market open. And so I refer you, to that for getting a little more detailed. But, the down and dirty of it is that the S&P 500 had a great fall, was in bear market territory, down over 20%, hit its bottom on the 7th, and is now like within a stone's throw of, the all-time high for this index, which it hit back on February 19th. And so, it gapped up on the open today and has kept on climbing up over 1% today. So, the bulls are back in town and they are flexing their muscle. When we look at the NASDAQ, kind of more of the same, up 1.6%. And, with the NASDAQ, it's kind of, it looks at the S&P 500 and says, anything you can do, I can do better. And I'm just kidding here, but, when it falls, it tends to fall more spectacularly. And when it climbs, it's climbing fairly spectacularly, and it, like the S&P, it's within 10 points of the all-time high. So, I mean, it is knocking on the door, my friends. And then how about the Dow? Now, the difference between the Dow and the other two indexes is that this is based on the price of the stock, not the market cap of the company underlying the stock. But it too is up, over 1% today. And, unlike the others, like we've had this inverted head and shoulders pattern setting up here on this index, and it has kind of taken its sweet time, hasn't it? Breaking out. It's like, okay, it's kind of like it broke out and then it came back and got caught on the 30-day moving average and is breaking out again. So it's like it's got two shoulders on the right, but, it seems to be breaking out with a little bit of oomph today. And, and so some might measure this from around that maybe 375-ish level to 427 to get an idea of where it's going. But the net of it is it's not quite as close. It got really hammer smashed by UNH. which is a pretty expensive stock that is part of this index. And given that the Dow 30, you've only got 30 companies, you have one that gets hit the way UNH did, and that has a high price point on it. And remember, this is a price-based index. It fell, almost 50%, and it tumbled quickly. It went from 630 back in November of last year down to 248. So you want to talk about giving Humpty Dumpty a run for its money. It certainly had a great fall and seems to be trying to work its way back, but has still not crossed that 30-day moving average. Okay, so is everybody familiar with swing trades? Or is anyone here for the very first time? So, well, let's pretend that somebody is here for the very first time. So here we have Lyft. And and Lyft was, not being very well lifted. It was kind of in this downtrend. And on the last earnings, excuse me, it really kind of came around. And it's not uncommon to see something come back and retest. And especially, excuse me, just one sec, let me have another drink. Just give me one. Sorry, dang. All of a sudden I got a tickle in my throat. Okay, so it's not uncommon when we have like a big up day like this to see something come back and retest. And your first level of potential support would be halfway through this candle. And then a second potential level of support could be seen to be around here. And it came right down and kind of flirted with it for a couple of days and is now moving back up. So a swing trade is characterized by something that has come up and then pulled back, and that we see moving perhaps to the upside again. And we had a high here of around $17. And so it's currently at 1587. So if we could put a trade in and say our target is going to be 1722. And if we buy the stock, well, our target, let's make our target $17. You'd say, well, that's only $1.30 a share that we'd make. Like, that's not so hot. Well, actually $1.13. But if we bring up our calculator and we say, okay, if I made $1.30 on an investment of $15.88, well, actually now it would be $1.12. That's an 8% return. It's not nothing, and so if we did that with the stock, and where might we put a stop? Well, we might say, hey, the recent low here was 1420. So I'm going to put a stop 2% below that. So I'm going to take my 1420, which was that recent low, 1420 times 0.98. Now, some might not like this because we're risking more than we can potentially make. We're risking like $1.80 to make $1.13. So 13.92 is going to be our stop, and our target, we're going to make our target $17. And so if we were to do this, now, one of the reasons we might do this, with stock is we could say, well, we have $7,000 we could invest. And our rule of thumb here in this account is that we can risk up to, we can invest up to $5,000 we can risk up to 500. And so if we're saying, well, if we buy in at 1587 and our exit is at 1392, if we were stopped out at the price requested, we'd be risking $1.95 a share or $195 for 100 shares. So if we did 200 shares of this stock, we'd be risking about $400. Now, with a stop, there's no guarantee that we're going to get out at exactly the price requested. There's also no guarantee that it'll go back up to $17. Although, TD Cowen this morning upgraded Lyft to a buy and raised their price target to 21, they could be wrong. And we're saying, well, we're not raising our price target to 21. We're raising it our price target is 17, but it was as high as $19, back here at the beginning of November. And so it's a modest, target. And the idea is the expectation is if this took a couple of weeks to come down here, that, we want to give it a few weeks to come back up. So if we came out to our trade tab, one of the advantages of buying the stock is that, it can take all the time it needs and we don't have to worry about time decay. So we're going to come in here, we're going to buy custom with an OCO bracket. We are going to buy 200 shares of stock. And then I'm going to hit this little firecracker and turn it into a paper clip so that our quantities will match. We're going to make our target $17. And we're going to put our exit in at $14.20. And we're going to make our target and our exit both good till canceled. Now, somehow, that is showing up. I can't get this. I may have to go in and change these afterwards to good till canceled because I've got something glitchy happening with my system, but we want both of these to be good till canceled. Now, let's just say that I hadn't caught that and I don't know why. I wonder if I can make this good till canceled. Yeah, it's not letting me change any of them. Okay. So when I come to confirm and send, I want to buy 200 shares of Lyft at the current price. And then I want to sell it when it goes up by $1.11 a share, or if it comes down by $1.69. We're going to put this in our stock with a target, and we're going to compare this to a long call. Now, I'm assuming that we can do a long call on this. And why do I say I'm assuming? Well, because with long calls, we have some rules. One is we want this to trade 1 million shares a day or more, well, which it does. And then if we come out here to August, because if we think this could take, say, 20 days or 30 days to go up to that target, we want to, give ourselves room to be out 2 or 3 weeks prior to it expiring. And if we bought the 16 call, which is just above where it's currently trading, it would cost us $1.56 per share, or $156 per contract. So if we can risk $500, we could do 3 contracts. Now, one of the guidelines or rules that a trader might have is that they want the bid-ask spread to be tight or no more than 10% apart. It's 3 cents. And, we're saying, well, we'll consider it acceptable if it's 15 cents or less. So we've got to check there. Do we have lots of volume on these contracts? 2,500 contracts plus? Yes. So if we look at, and again, we're looking at buying custom with an OCO bracket, because we want to put the target in. Now, we don't know quite what the stock is going to be worth. So we're going to do this conditional order to say, hey, when the stock goes at or above $17 a share, we want to exit. And then with a swing trade, some traders could say, hey, if it goes below that amount, I want out. But some might say, hey, if I've lost half the value, if this gets to the point where it's worth about 78 cents, it's lost half its value and something isn't going according to plan. Either it's lollygagging about going sideways, or, oh, now I can type in GTC. Isn't that interesting? Okay. And we've got time decay going. Oh, yeah, and you know what? We're going to do 3 contracts. Why 3? Because we can risk up to $450. And if we buy 3 contracts, how much could we lose? The entire amount. So we could lose all 468, even though we're putting in a stop at 50%. If the stock were to gap down, we could theoretically lose this entire amount. So by the time the stop triggered, we may get out for far less than that 78 cents. Now we could get out right at 78 cents, but we don't know. And we're going to compare this to the stock. Example trade. Okay. So we're going to send that in. Now you may be saying to yourself, okay, self, like Barb ran the numbers on kind of a percentage return. What might my percentage return be on this if, it comes up and hits that $17 target? So the first thing you do, we're going to come here, we're on the trade tab. And the reason I'm pointing this out is because the first time I saw this, like I'm a student of this education, or a product of this education, still a student also. But the first time I saw it, I thought it was the coolest thing since sliced bread. And then I couldn't remember where I saw it. So you're coming to the trade tab, to the option chain, and then you're changing this to Theo Price. And when you do that, it brings up this. And then the first thing you're going to do is hit reset when we click on that. So this is where you're going. Yes, and this is being recorded. Absolutely. Okay. So we're going to come to Theo Price. The first thing we do is hit reset. And then we're going to say, hey, I want to exit this when it goes up about $1.10. So plus $1.10 a share, I want to exit. And today is June 24th. So what if it takes 2 weeks? So July 8th. So I paid, let's say we paid $1.55 for this. We get out at about $1.99. That's if volatility stays the same. And if in fact it takes 2 weeks. Like if it went up and we got out by Friday, so if we change the date, which would be quite a move for this stock. So June 27th, you see, we get another 20 cents, which is pretty huge. It's another, 10, 15%, because time keeps ticking away and it decreases the value of the option. But if we said, okay, if we ended up by about 45 cents on a $1.50 investment, that's about a 30% return. And so when we look at that, you think like, wow, why would anybody ever buy the stock? Well, if, let's say we come to, this expires August 15th, let's say this stock is kind of, trades in a range, and come August 15th, it's trading at about $16. So what's the stock going to be worth? The stock's going to be still worth $16. What's the option going to be worth? Nothing. Because we bought the $16 option. So like if it's worth $16 or less, it will have no value. But the stock, we won't, we'll have lost maybe the time value of what else we could have invested in that might have done better. But, we haven't lost, we aren't down on this particular trade if at expiration it was at 16, where with the option, it would be worth less and ultimately worthless. And so, this is something that we want to take into account. And if you want this to show up on your chart, we can change this to 17, and we're going to say this is our target and say show that on the right. Now, somebody's asking if this is archived, and yes, it is. And you're going to want to hit the subscribe button in the bottom right-hand corner of your screen. And what you're subscribing to is the Trader Talks channel. And so when you come here to the Trader Talks channel on YouTube from Schwab Coaching, and this is a free resource, what will come up first is whatever is currently being taught. So, and right now we're doing swing trading. If you come to playlists, here's the swing trading playlist. And so this is Mike who typically teaches it, but I'm going to put a link into this swing trading playlist. And it will be in the show notes below if you're watching this in the archives, but I'm just putting it in the show notes. The other thing I wanted to share with you is that I've created this group, and it's just really a repository for additional resources provided currently by me. And it's called the Trade Management Mini Sessions. And so one of the things that I have done is I've created a bunch of playlists, a bunch of example trading plans. And I do have one for a long call. Now I haven't created one yet for a swing trade. But with swing trading, a lot of, whether it's a swing trade target or I think the example, in this one for long calls with a 1 ATR target, it's just that the target is different. That you want it to trade 1 million shares a day or more, that might be the same. That you want to have 20 times the number of contracts on the books of the strike you want to trade, that's the same. The bid-ask spread, so there are many things that you could take from that to create your own trading plan. Okay. Somebody's asking, what class I'd recommend to better learn about the trade tab and learning about margins and options. There's a class called Getting Started with Options, so you may want to look at that. There's also one called Getting Started with Technical Analysis, which is all about the charts and understanding how stocks move. And that's kind of a precursor almost to the Getting Started with Options, because you need to understand how stocks move to then understand how options might work as part of that. And then if you're new to Thinkorswim, there's a bunch of short videos here, most of them under 10 minutes, like on how to customize your monitor tab or a chart or a watch list and that kind of thing. So this is kind of a catch-all resource, okay? And then I put in a couple, if you haven't seen these, I'd encourage you to check them out. There's one on the power of compounding, 2 on the power of compounding, and then there's a bunch of short videos on just different candlestick patterns. Okay, so back to our regular programming. That answered about 3 questions there in the chat. Let's have a look at Oklo. Now, if you're not familiar with this company, year to date, this thing is up 155%. Like at one point, this thing last September was trading at $5 a share, and it's gone up to hit a high of 73. And in technical analysis parlance, and first, if you're not familiar with this company, if you hit the Analyze tab, you'll see it's a utility. They're in the nuclear power space. And when we kind of zone in here, one of my favorite games to play is I Spy with my little eye. And what I'm seeing here is this, we call this a cup and handle pattern. And with a cup and handle pattern, a technician might say, okay, we've gone from 20 to 55. So they might be expecting about a $36 move potentially to the upside. And so if they wanted to put a target, they might say, okay, well, I'm going to make my target up here around 88. So why do I tell you that? Just to throw in a little bit of technical analysis and to say, well, maybe what we want to do, sorry, that was from the last one, is just say, well, hey, it came up here to around this $70 mark, 73.55 was the high actually. Could we put in, and this is a swing trade, it came up, pulled back, and just let it swing back up to the previous high. And rather than setting a more aggressive target, could we just, do a shorter term trade? And often, we'll just, with a swing trade like this, it took 1, 2, 3, 4 days to pull back. You might only be in this for a week. Now it might come down and hit your stop and you might be out of it, and end up losing money too. There's always that possibility. So where might we put a stop if we were to buy the stock? Well, the recent low was 52.12. So if we went 2% below that, it would be 52.12 times 0.98. So 51.07 will be our stop. And where might we put our target? Maybe around this $70 mark. And again, you might say, well, we'd be up about $10 a share, so call it $9.60 on a $60 investment, a $60.40 investment. I'm rounding. So that's still a 15% return on the stock. Now, in our account here, we don't have 6,000 to invest. We don't even have 5,000 to invest, but could we have bought, and let's just see, we have some other stocks with targets. I wonder if they're close. Let's look at Affirm and Goldman Sachs. Where did we put our target on Affirm? Now on this one, it wasn't a swing target. 79.50. I think our target on that one, 79.50. So this one still has a ways to go. I think this one was based on a Fibonacci extension. But I was just looking to see if we could free up some cash. So if we wanted, we could buy $3,000 worth of Oklo. We don't have to buy 100 shares. So if we wanted to do that, we could. Or I do have another account. So just to make it simpler, if we come to this other account and we say, okay, in this account, that's $500,000. We can have a $25,000 position and risk up to $2,500. So if we say, okay, I'm going to do 300 shares of stock, and I'm going to do this same buy custom with an OCO bracket. We're going to put in our target at $70. And we're going to put in our exit at 5107. I'm going to make these good till canceled. Confirm and send. So we're risking $9 to make $9. It's a kind of a 1-to-1 risk reward ratio. And some may be okay with that. Some might say, I'd rather it be 3-to-1 or 4-to-1. And I hear you. But what is our what are our odds of being stopped out or of it hitting our target? We can look at that. So we're putting this under our stocks with targets. Now we've only done 100 shares and we wanted to do 300. So we're going to come back here. So this is 18,000. Actually, we could probably do 400 shares. Now, but if we did 400 shares, 4 times 9, 3,600. We don't want to risk more than 25. So, it meets our position sizing requirement as far as being under 25,000, but we don't want to risk 3,600. We don't want to risk more than half of 1%. So we're going back to 300 shares in order to honor both components of our position sizing rules. Now, do we think we're going to lose money on this? No, the plan is to make money. But sometimes, in spite of the best laid plans, things don't always go, quite the way you want. So, and we'll compare this to a long call example also. Okay, so fire in the hole. There goes the first one. And we're going to come out to August because we want to give it a little bit of wiggle room. Even though we're expecting only to be in this for 5 days, we're going to pay more for this option. But then the plan is to be out and have more, it'll be worth more when we sell it. So when we look at this, we've got lots of contracts, a tight bid-ask spread, 15 cents. Is that less than 75? Yes. Does this stock trade more than 1 million shares a day? Yes. How much can we risk? 2,500. So how many of these could we do? 3. So we're going to buy again custom with an OCO bracket. With our swing trading plan, we're going to say, hey, I'm going to take 770 and divide it by 2. If it's lost half its value, we'd like to exit. And if it goes up according to plan, I don't know quite what it'll be worth, but we've got to make this good till canceled. And we'll bring up our conditional order sheet saying, hey, if and or when this goes up to $70 a share, we would like to exit the position. Now you may be thinking the same thing you thought the last time, like, well, what could I make? I like the way you're thinking. So we're going to come and put this in our long call group and put a note. We're going to compare this to the stock position. So that if you're following along in your paper money, you can do the same thing. And then remember, we're going to come back. We're still on the trade tab, on the option chain, and we're going to come back to Theo Price. First thing we do, hit reset. Then we're going to come down and we're going to say, well, we want this to go up by about $9.70. So we're going to add $9. And this is just like a guesstimate, right? Based on where the stock's currently trading. And, so that would take it up to $70. So, and this is not changing the date. Well, let's say we're expecting this to really move and that by the 1st, we expect it to hit the target by next Tuesday. So if we paid, let's call it $750 and we got out for $12.50, well, how much could we make? Divided by 750. Oh, that's a 66% return, 67% return. The devil's in the details, right? So, but this is if we were out on the first, if volatility doesn't change, like there's a bunch of ifs around this, but it gives us a ballpark, of, and what our expectation is. It's Tuesday. So if in fact it went back up to 70 in 4 or 5 trading days, we could see that type of return. Now, why am I not doing, one to the downside? Well, because we put a stop in and we're saying our exit is if we're down 50%, of the option value. Now, again, if the stock were to gap down, it could trigger that sell and we could end up out on the stock side at a price lower than what we had anticipated, and on the option side at a price lower than what we expected. Okay, so that could go either way. Okay. Now, when we look at, have we got any other questions? Oh, there's a survey. Yeah, so somebody's saying, I didn't know you also teach this class. I don't typically teach swing trading. It's typically Mike Fairborn. I'm just filling in for Mike today because today he has the rule off, the day off. And somebody asked about the rules. So I showed you where I've got those example trading plans that you can use as a template from which to create your own trading plan. And then if you wanted to look at, some other examples, well, we have Lily here that's been kind of in this big range, but even though it's moving to the upside today, it's still in a downtrend. We haven't seen within this sideways channel, this diagonal resistance breakout. And you might say, well, I don't care about that. I just want to trade it back up to here. All the more power to you. But others might say, I'd rather look for another Oklo, which is, it had this big pattern, but really since I hover over this candle here, since the end of April, this thing has been uptrending. And we've seen a series of higher highs and higher lows. And it's been a pretty steep trajectory. Like if I add a 10-day moving average, edit studies. So we're going to come to simple moving average. And I'm going to add one. And then I'm going to edit it. We can make it 10. And we can leave the color green. I usually have mine blue, so I don't want to confuse myself. And why do I choose red and green or red and blue? Because the first coach whose classes I watched all the time, his lines were red and blue. And so I just wanted to kind of mimic what that coach was doing. And it was less confusing if I kind of did the same kind of thing. So if you want to just stay with something that's more steeply uptrending, you're trying to catch a stock that's in momentum. How about 5? Well, we're seeing something similar here. Now we're on the other side of earnings. It was downtrending, but again, since the beginning of April, this has really been uptrending. And we could have used this as an example, except that it's starting to pull back. But I mean, it's down by 10 cents. It's not down by very much. But we didn't see, like with Oklo, we saw this kind of steeper pullback, right? So we saw this kind of steeper pullback and then this Harami pattern and then a big move to the upside, where it's kind of come down and then it's been, I call it lollygagging about. It's been kind of going sideways. So if we buy the stock and it continues to go sideways, we're okay. Like we're not making the money. It's not doing what we intended for it to do, but we have time. If we buy the stock or buy an option and put in a target up here and it continues to go sideways, that won't bode well because time will just start eating away at the value of that option. And if it doesn't go up and hit our target, we're snookered. So, yeah, so we're not going to do that. Okay, so, how about MasterCard? And again, so what's the problem with MasterCard? Well, I'm not saying there's any problem with MasterCard, but again, with Oklo, we saw a series of higher highs and higher lows. So here we have high, higher high, but then lower high, lower high. And I don't know if I really see a diagonal resistance breakout yet. So do we have a legit entry? And you might say, well, it's a legit entry from my definition. Well, good for you. I'd be looking for a diagonal resistance breakout, and I'm not seeing it. So even though I have this bullish engulfing pattern here, and then it moved up pretty dramatically today, some might say, well, why don't you just make the target 594? Well, you can. Some might say, I just want to see it get above. Like it's still below the 10 and the 30 day. But just because we have something to swing up to doesn't mean we have to do that. Okay. So that's what I had for you today. We did 4 trades. We did 2 on Oklo, where we bought the stock and then bought a call, which in trader speak is a long call because we're buying the call to open the position. We had the same target on both the call and the stock. And then we did the same process on Lyft, where we both bought the stock and then we did a long call, or we bought a call with the expectation that it's going to go up and hit our target, which was the previous high. And we can track those in upcoming webcasts if I have the chance to fill in for Mr. Fairborn again. If you've got those in your paper money, you can track those. Yeah, and there's a survey in the chat. So as we wrap up, my ask of you is, one, if you haven't already subscribed to the channel, I encourage you to hit that subscribe button. It's free. It's another free resource. Hit the like button. It helps move things up in the algorithm so that more people can find this content. And it lets Kevin and I know that you found this to be valuable. And then there is a survey in the chat. And if you fill that out, I will not only read every comment, and there's just 2 questions. So it's 1, I hated it, 10, I loved it, and everything in between. But I will pass those comments on to Mike for upcoming classes. Or if it's a comment specifically for me, I'll incorporate that into what I do going forward. So I want to thank you for being here today. I want to thank Kevin for doing a great job in the chat, and to the people behind the scenes for doing the superlative work they do to help bring this webcast to life for all of you. So up next, and here's another resource for you to check out, is the Schwab coaching site. Today is the 24th. So up next is selecting an option strategy with Connie Hill. You'll want to stay tuned for that. And if you haven't used this before, you'll want to come to Schwab coaching schwab.com/coaching. So for those of you who are going to be at the Market Drive in New York this Saturday, I will see you there. If not, I'll see you in Trading Price Patterns tomorrow at 1 o'clock Eastern. Take care, everyone. Enjoy the rest of your day.